what I want to do is start off with the market structure basics. So when we are identifying market structure on a price chart, it is a crucial part to actually knowing what the pair is doing. So knowing what phase of the market we're in and how to know when a pair structure is shifting to a different direction. So is a currency pair trending up, trending down? So are we putting in lower lows, lower highs, higher lows? Are we ranging? So a range bar market where we're staying within, two price points, not really moving up or down. Is price impulsive, corrective? So we will know what a pair is doing by identifying the structure. So as I just said, what we have here on the left is an uptrending market. So in an uptrending market, we will get higher highs and higher lows. So as you can see, we have a high here and price pullback. Now, as soon as we get price break above this high, it confirms this to be the higher low. So all the time that price is trading within this high, so below it, we haven't got a confirmed higher low until we break above. Okay, so once we break, this is the most recent higher low, and that's the higher high. We pull back, higher low. We then wait for a new higher high, which confirms the higher low, and then higher high, higher low, higher high. Now the same is in a downtrending market, but obviously it's flipped, so it's the opposite. So we will get a low, a pullback, and this lower high is not confirmed until price breaks this low here. Okay, so we get a break below, which confirms the lower high, lower low, pullback, lower low, confirming the lower high, lower low, confirming the lower high. Okay, so this is, the basics into trending markets and, the market structure. So a higher high is not confirmed until we get a break of the most recent high, and then vice versa for a downtrend. So let's jump on to Euro USD and let's just look at this on the charts. So let's just start off here, okay? So price is pulled back and we've broken. So we've made this low, which you could say kept going lower until here. This is when we actually got a pullback. So this low, this whole leg down, broke below here. Okay, so you can clearly see it's broken this low. So we have a lower low. We then have a lower high. So you can see price pulled back, which is tapped into an order block, which would be more visible on a lower time frame. So the low that we need to be broken is clearly here, which you can see price pulled down to here. This is one, continuation leg to the downside. Then price pulls back, but this is not confirmed as a lower high. But you can see what price done is tried to come down, but we failed to break below this lower low, and instead we come up to test the lower high. We then pull back, but then we break it with this move, this impulsive move up that broke this lower high. So as the lower high was broken and we didn't get a lower low, our bias has flipped from a bearish market to now a bullish market, because you can see the lower high was broken. Price then pulled back and we get a higher high, which we can classify this as the highest point. So you can see this is a new higher high because it broke above this highest point here, okay? We then pull back and make a higher high. This is now confirmed as the most recent higher low. Now I'm just going to zoom over. So we have a higher high, higher low. Price then pulls back. We consolidate for a good few days here. We come up to test this high, but we don't break it until here. So where would we classify the higher low? Well, technically the lowest point is here, so we can mark this as our higher low. Bearing in mind we have areas here that we can look to be getting long from. But this is the higher low. We then get a higher high, which, you know, the highest point is it's around here. So that's the most recent higher low, higher high, higher low, higher high. This is confirmed once we got this impulsive move up that broke this high. Now, we could say that we had an impulsive move up that made the higher high. We pulled back, and then we made this higher high, and we come down to test it. We pulled off, and then we broke it. So essentially, we had a little break of structure, but this could be grabbing liquidity from people who are in longs on these higher lows with stop losses. We didn't quite tap into any sort of point of interest. We just sort of pushed up from here. But the lowest point is here, and then we actually do put in a higher high and a higher low, okay? So this is basically, market structure, when price breaks structure, we get a higher high, it confirms the higher low, and we want to look for the lowest point. So the lowest point is here. We then put in a higher high. Now bear in mind, we do have a lot of breaks of structure within this on a lower time frame, but this is the overall sort of picture on mapping out your market structure breaks. Okay, so now let's get into market structure mapping and the different types of structure breaks. Now getting into market structure mapping, there's a few different variations of market structure breaks that I want to cover. Now, it is important that you choose one of the following as your market structure break and as your go-to to stick with, and be consistent with it. The more backtesting you do and the data that you collect, you'll come to find which one works for you and the one that you want to use. So once you find it, it's important to be consistent with it and use that as your go-to. So the first type is going to be on the left here, and it's where price breaks structure. So if we look at this, we have a low and price pulled back, and then we broke the low, okay? This type is going to be where we classify our breaker structure with a candle body closing below the bodies of the candles. So the low we're looking at. Now we're not taking into consideration the wicks. We're just looking at the bodies of the candles and a candle body closing below them bodies, okay? So break type 2 is going to be where it's the same as type 1, but we're looking for a break below the wicks. So a candle body closing below the wicks. Now this is the one that I personally use, and it is the most popular, definitely, because I think it is the most reliable. So it's definitely the one I recommend for you to use, but again, it comes down to your own preference and what you find the best consistency with. So type 3, this is the final type. It is a candle wick closing below the candle wicks of the low. So wick to wick. Now in my own years of experience, this type is the least reliable out of the three, 100%, as it does not really show us any true break. So you need to think of it as, prices come down and it's tried to break and close, down here. So price got to this area here, but it's wicked, and buyers have come into the market and closed it back up here above the actual low. So when I see something like this where we get a wick and it closes above, it could be just grabbing liquidity, faking out people into the market, like enticing them in before reversing. So It's definitely not one that I would ever be using. Type 2 is what I want you to focus on, or type 1. They're both, reliable, but type 3 is not reliable in my opinion. So type 1 and type 2, do your own back testing and data and see what works best for you. So looking at some examples of structure breaks, what we can see here on Euro USD hourly time frame, we had a break in structure here. So if I just zoom in, you can see we had this high, we had a little bit of a range, and then this candle broke structure and we got a wick, but we did close above, and then you can see price pulled back into a bullish order block, which is here, before we see some huge momentum to the upside. Now, as we broke above and closed above the structure, this would be, for me, a valid sort of trade to be looking at as we come back into this hourly order block, which we can refine on a lower time frame. But if I look at some of these examples here, you can see we had this bit of a consolidation range. We pushed down, ranged, we had a low, price come down, looking like it was going to break this low. We wicked it and closed above, and then you can see price then reversed to the upside. So for me, this is just grabbing some sell side liquidity from these equal lows before they reverse price up to these highs here. As you can see, we also get a wick above this high, which is taking some more buy side liquidity. Price then reverses, we put in a new low, and then we pull back, and then we have a huge wick. So we, at one point, price was down here, and then we actually closed bullish. So we pushed down below this low and then closed above it. And if we look left, we can also see that this wick tapped into a bullish order block, perfectly mitigating before continuing. So this is why this is definitely not a valid breaker structure for me, because this is just, it's generating liquidity, rebalancing this impulsive move here, tapping into a bullish order block that has yet to be mitigated before, reversing price to the upside. So that's why it's important to understand your breaks in structure and how it's breaking. So is it breaking, showing you that it actually wants to break and go in that direction, or is it breaking with wicks, mitigating something to the left before then continuing to the upside? Now the last example on EU again, I'm going to go through quickly. So if we look at what price was currently doing, we was clearly putting in lower lows and lower highs all the way down here. Now if I just zoom in a bit more, so fully zoomed in, you can see at this point here we had price put in this lower low and a lower high, because you can see this is the lower low that broke this low here. So then we can see that price impulsively broke this structure. Now for me, this would be a valid breaking structure, because you can see we had a candle body that closed above the wicks of this lower high. Okay, so once we got this, we can see we left imbalance as well. We have a nice momentous move showing us a change in market structure. We can then take the last down candle as our order block, which we can then obviously refine down to this candle here, because the momentum came in on the next candle which broke structure. So you can see after that we did get a good day or so of a range bound market. We did break structure again, so we did break structure here. Price did come down quite impulsively into that level. We did range. This is building some liquidity, which is more seen on a lower time frame. We have equal lows, price come in, tapped into our order block, which we can obviously refine on a lower time frame, but this is what we can be looking at. and then you can see price reacted from this order block, rebalanced bit of price, and then we can see the impulsive move to the upside from here. Okay, so moving on, I want to get into looking at how does price break structure. So when we are looking at structure breaks, it's very important to note how it breaks that particular piece of structure. So what I mean by this is, are we breaking structure and truly switching from a bullish to bearish market, or vice versa, bearish to bullish? Or are we breaking a structural low high, grabbing liquidity, tapping into an unmitigated area of interest to then see price continue with the overall trend, whether that be bullish or bearish? This is why it's important that we take note of how price breaks, because it will give us a really solid idea of what price is actually doing and where it's likely to be heading. So this first example, I've drawn some diagrams here. So this is going to be our hourly time frame. Okay, so you can see we're putting in higher highs, higher lows, all the way up. Now, this move down broke the higher low. Okay, so we've got breaking structure. So what we're going to be assuming on this example is this move here is a calm and corrective break of structure, meaning it's, you know, there's not much momentum behind it. It's just a breaking structure with corrective and low momentum candles. Okay, so when we get this, so we're going to view this as a calm and corrective breaking structure, meaning it's very likely that price is coming down to sweep liquidity and tap into an unmitigated demand zone that was previously created. Because once we was making these higher highs and higher lows, you know, we're breaking structure to the upside, which is creating demand levels and order blocks. We may see something that's left behind and untested or unmitigated, you know, imbalance left behind as well. So this breaking structure could be, you know, grabbing liquidity from anyone who's in the buys and trailing stop losses at the lows, because we know that there's liquidity at every low and high in the market. So this could be a breaking structure, taking liquidity, tapping into an order block which is unmitigated before continuing with the overall bias, which is, you know, bullish. Okay, so this would be our hourly demand, price tapped in. Now what we can see from this on a lower time frame, so this is the hourly. If we look to the right here, this is our 1 minute perspective. So this is going to be our 1 minute time frame, and this is our hourly demand. So this blue box here, okay, which is shown here. So this move coming down that broke structure will look like this on a lower time frame. So we will be seeing lower lows and lower highs. As price taps in to the hourly demand, we can look for, you know, where is the lower low and the lower high? Well, we have a lower low here, and this is the most recent lower high. We can look for price to break structure, and that will create our bullish order block, which we can look to get long from. Now with targets, we can look for, you know, previous hourly highs, because the anticipation for us is to still see bullish order flow. We've swept liquidity, so we want to see price put in new higher highs. So let's now look at the same, but a change in how price breaks structure. So in this example, this is the same, but we're going to be looking at this breaking structure as an aggressive break rather than a corrective break. So we have the same thing, higher highs and higher lows. This is now going to be an impulsive break of this structure. So let's just go through it. So an aggressive breaking structure, meaning we would see some large momentum candles, which would ultimately leave behind price imbalance. So on this move here. So once price broke structure, we can classify this as the market shifting from bullish to bearish, because we've seen, you know, large momentum. So the BOS, meaning breaker structure, once we get that, we form a supply zone and order block, which we can look to get short from, as we can anticipate a pullback into that zone and for future lower lows and lower highs to take place. Bearish order flow. So once we get an impulsive breaker structure, this would be our supply zone, somewhere up here. We may have areas below it, which we can refine on a lower time frame. But for this example, we're going to be saying this is where we want to get short from. So again, we can look at the 1 minute time frame perspective. This is what we could look to see as we tap into the hourly supply. So price is forming higher highs and higher lows coming into it. We want to see a nice breaking structure below the most recent higher low, which will give us an order block, which we can look to short from. And the same goes for targets. At a minimum, as we've switched our bias from bullish to bearish, we want to be looking for price to put in hourly lower lows and lower highs. So this would be the most recent low. We want to see price take out this low. So this is a good place to target for, a very first target at a minimum. Understanding the buy to sell approach. So we shouldn't be afraid of buying before the longer term sell. So what I mean by this is, let's say price broke structure to the downside, as we can see here. Whether that was a calm or aggressive move that broke the structure, we can still look to take longs from an area, if there is an area there to long from. So if we have a demand level which was untested, then dependent on how the lower time frame confirmation, what is showing us on a lower time frame as we come into this level, we can take longs from here, where we can target a supply zone which was recently created from this broken structure. So we can buy from here and target up here before a longer term sell, which we can then expect for price to make new lows, and then lower lows, lower highs from there. Now this move from here, as we can use the lower time frames to our advantage, we can obviously get in with a very tight stop loss, and this move from here to here could be 30 pips, 20, 60, whatever. We can still make some nice percentage in this move here before we look to sell. So we can buy to sell. Now, the reason why this is also higher probability is because once price comes into this level, we're essentially mitigating this move, taking liquidity from anyone who's in buys or even trading some form of breakout on this structure break, whatever the case may be. Liquidity is being taken, so people are getting stopped out to then see price come in to a supply zone. So it basically it clears the way for liquidity, and price can tap into a supply zone, and then we can short from here. So this move now has been mitigated, this demand zone. We've seen a push off, so we can now classify this as a completed sort of move. We've pushed off, so then once price comes down, there's not much real reason why this demand zone will hold again, because it's been mitigated already from this move here. So we can see, price come down and take out these lows here. An example of a buy to sell, or in this example, is going to be a sell to buy. We're going to talk about, when we break structure, we can sell, and then we can look for a longer term buy from an untested area. So this is also a trade that I took this week, so the week just gone. So I think it's a good example for me to use. So let's get into it. So if we look at price, we had this high and price come up. We see a bit of a range. We did form equal highs, and this is the high that took some buy side liquidity. So once we had this high, we had a higher low here. So range, this is the move that broke to a new higher high. This is the higher low. We can then see price After sweeping buy side liquidity, we came down to break structure. Now on this candle here, we actually wicked it, but if we did drag it along to this candle, we did close below. So this is a valid breaking structure, and it's also seen on a lower time frame, the 15 or 5, where we did actually close below. But this for me would be on the hourly, it's a calm breaking structure. But as we have closed below, we can still look to sell from this supply zone before a longer term buy from these areas down here. So once we broke structure, as you already know, we have the last up move before the down move that broke structure. We can then also refine it from this last up move to this candle here, because we can see this candle has not engulfed the order block. So this is our supply zone and order block, which we can look to get short from. So as we came down, we did get some wicks, which for me is just taking liquidity from this higher low prior to this one. So you can see we had this wick that come down. So anyone who's in buys, who's holding from this uptrend, would likely have stop losses at this low. So we can see price come down to take that liquidity, reversed, and then reversed again. So this happens every single day. You'll see it on every time frame. So I'm not going to get into my entry on this trade. I will save that for a coming video, which is coming up soon. But I did take a sell on a lower time frame. So once we tapped in, I was on the 1 minute time frame looking for reactions and breaks in structure, which leaves some imbalance, but I'll get into that. So we can take a sell from here as we tapped into a supply. But if we look left, as I mentioned previously on the diagrams, we can look to see if we have any demand levels that have been unmitigated and left for a later date. So let's have a look. So we had this higher and a higher low. Price come up to form these equal highs, and then we see some huge momentum that essentially broke this high here. So we can mark it on as a breaking structure. We wicked it, but we can see this is a range, and then we expand it out quite momentously, leaving behind imbalance. So for this example, I'm going to put on this demand level. We do have an order block, so this is the order block, but let's just mark on the actual range from the high end to the low. Should be there. Okay, so as price come in, we can note that we've seen some heavy momentum coming into this level. So price has taken out this low, rebalanced this move that was made previously, but price is impulsive. So what we could do on a lower time frame is we can wait for price to slow down, show us that it actually wants to respect this area and actually go long from here to potentially back up to these highs. But if we get another candle, something like this that just completely destroys this demand level, then it hasn't holded. So we can just classify it, or we can just deny it and just move on and look for bearish sort of structure and look to get short. But the next candle, I'm not going to go down into a lower time frame and look at the entries, but you can see we did close below it. We wicked below it, but we closed back up. Now for me, this is not invalidating the demand zone, because it's about how it breaks. Is it breaking momentously, or is it breaking correctively with wicks? And we can see it is breaking with wicks. So on a lower time frame, firstly, when we get wicks, if we get a wick on an hourly time frame, it will be an order block on a lower time frame. So wicks just show us order blocks basically on lower time frames. So there is entries here on a lower time frame like the 5 or the 1 minute, which I won't go into, but you can see what happens next. We do respect the demand zone and we do correct, but then you can see we come up to rebalance this candle here from wick to wick. We then break above it and you can see we then do come up to previous highs and back up to test this wick here, which we know as an order block on a lower time frame. And that's where price then reverses again. So you can see how, let me just mark it on. So this wick here we know as an order block on a lower time frame. Look how price respects it. Now we do wick above it, which is, you know, it's likely because we want to, price wants to generate liquidity before reversing, but ultimately it respects it and then we break structure back down to the low. So this is where price currently is, but this is just the concepts of, you know, buying to sell, selling to buy. Now as we've already tapped into this demand zone, it's likely we could now see lower prices, and we can look for sells, but you know, price will tell as we go into next week. But I hope that was valuable, and if you have any questions, let me know in Discord.